Hey everybody, I hope you're having a wonderful holiday season so far. I'm Jacob, and in this video I'm going to share my dividend income for the month of November 2022. If you don't know, I like to track my dividend income on a month-by-month basis and share it with you, because I'm all about full transparency and I'm personally on a journey to financial freedom, and I think dividend investing is just one good way to get there. And in turn, I hope it inspires all of you to start your own journey if you haven't already. So with that being said, the current portfolio value is just a hair over $29,000, and the overall gain is sitting just above $5,500. Now, over the past month, this portfolio has performed fairly well, up $1,800, but year to date, we are still in the red, down over $1,300. So if December turns out to be anything like November, we may have a shot of going in the green, but quite frankly, I think we are still going to remain in the red. A few performers that I just want to highlight for this month. The best sector was healthcare. You can see 9% gain. We have a few other ones like finance and my ETF pie, which are around 8%. The lowest return actually comes from the energy sector at about 1.33%. And that's to be expected. Energy companies have a lower beta compared to the overall market, and beta is essentially just a measure of volatility. So from a capital gains perspective, energy companies aren't going to spike, but they are pretty good defensive plays when the market isn't performing very well. Some of the better returns come from the tech sector. Companies like Broadcom and Microsoft had really great months, greater than 16% returns, while more volatile companies like Asana and Tesla are in the red, 12 and 9% respectively. And that's why you diversify your portfolio to reduce your unsystematic risk. You're going to have some companies that perform well and others that perform not so well. So you want to find a way to balance out the poor performers. Anyway, with that being said, let's hop into the dividends and hammer through these suckers. All right, so on the first of the month, we got paid $4.81 from AT&T, and this is a position that I have not added anything to ever since their stock split with Warner Bros. Media, and I'm glad I did not do that because it has performed quite poorly since that time. Costco, a fairly decent growth company that has a lower dividend payment, but this seems to be a company that performs exceptionally well during a recession or an economic downturn, just because consumers can purchase goods really cheap at Costco, and it always seems to be a pretty big hit. So they paid $1.14. Next comes Apple at $2.45. And it's interesting, in the news recently, Apple has been talking about shifting production out of China into different countries like India and Vietnam, due in large part because they want to diversify where they produce goods. China right now has a lot of protests going on, a lot of restrictions due to COVID-19. And quite frankly, this is a move that was probably inevitable, because as time goes on and countries evolve, regulations change, economics change, places like China may not be as desirable to do business as they once were. Enterprise Product Partners is next, and we got a massive dividend from them at $21.82. Following that is AbbVie, pharmaceutical company, $5.85 is what we got from them. Ally Financial comes in next. Definitely more of a volatile bank compared to the JP Morgans, the Bank of Americas. But I do like Ally because, for one, they always tend to pay one of the higher interest rates on the market. And two, they do seem to be more of a crypto-friendly bank, which I personally think is good for the future, because I do think the crypto industry is going to continue to grow, especially as more and more people understand the inefficiencies in the current traditional financial system. But Ally paid $4.36. After that is Colgate, coming in at $2.24. National Retail Properties, a REIT that pays quarterly, they brought in $10.11. Procter & Gamble comes in next at $4.13. Realty Income Corp, this is a monthly paying REIT. I feel like almost every dividend investor has this stock in their portfolio, so you probably know about it if you're an investor as well, but they brought in $5.90. Stag Industrial, another REIT that pays monthly, they brought in $2.63. Caterpillar, the famous industrial company, paid out 90 cents to me this month. And to round everything off, I got paid out $7.18 from SPHD, which is a monthly paying ETF. And when everything is added together, that brings our total for the month to $73.52 in dividend income. Now, compared to this time last year, we got paid $68, so we're up about $5 there. And probably a better comparison is last quarter, we got paid $77, so just down about $4 in that respect. But overall, we are trending upwards, which is really great to see. All right, guys, so that is going to wrap up the video. I do want to thank you for taking the time to check it out. Again, I just want to emphasize that I don't do this to show off my returns, to brag or anything like that. This is really just me documenting my journey from an investing perspective, being completely transparent with you guys about the investments that I have, the income that it brings me, at least from a dividend perspective, and I hope that it ultimately inspires you to start your own investing journey, because I think the power of investing, compound interest, is really powerful, and it can leave you in a very good position financially if you do it right. So that's all I got for you guys. Thanks for watching, and I'll catch you in the next one.